Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 6th of May 2018, and we're discussing why we believe gold will fall into $1,200 territory very soon. Since gold peaked above $1,900 in 2011, we have seen many pundits, usually gold and silver sellers, stating that it will rise even further, at least to $3,000, then $5,000, then $10,000, $20,000, and according to Bill Holter, even $100,000 an ounce. Well, we have always been skeptical since our channel began, and the reasons are simple. 1. Gold has limited industrial use, and therefore is only worth what people perceive it to be worth. 2. Gold supply and demand is very much in sync with one another, save 100 or so tons, so why should its price skyrocket? 3. It's not in the interests of world governments or central bankers to see its price rise inexorably, at least not yet, when so many of them hold so little. 4. It yields no income, and other assets have been, and may continue to be for some time yet, more attractive to investors. And 5. Imminent financial collapse is a myth peddled by pumpers to increase sales. No serious economist, banker or investment manager, either privately or publicly, believes that the world's financial system is about to collapse anytime soon, especially after the corrective actions taken since 2008. Now, before we continue, we're not saying all is well and that increasing prosperity is guaranteed. But we do believe there are still, at the moment, enough checks and balances in place to keep the world's economic system running relatively smoothly, in similar fashion to that which it is today. Now, with the abolition of Dodd-Frank, a loosening of credit facilities, and a tendency for governments, even Republican ones, to overspend and increase their national debt, chickens will eventually come home to roost. So there will be a day when an economic reset will be necessary. But we believe that will only occur either when the US national debt reaches close to $30 trillion, as opposed to the $21 trillion it currently stands at, and or a major political error results in serious military conflict between two or more major powers. So let's take a brief look as to why we believe short-term gold prices have further to fall. First, gold is currently languishing at the $1,315 level and seems to have been operating in a range of $160 over the past year, $120 over the past 6 months, and $60 over the past 3 months. These ranges becoming increasingly squeezed, with gold today standing above midway between its lowest level in the past 12 months at $1,207 and its highest level at $1,364. In recent months, we have witnessed political tension, with the US president consistently under fire, trade sanctions being announced against China, military threats with North Korea, and tit-for-tat diplomatic expulsions between Russia and a number of developed economic Western powers. In addition, a hardline approach against Iran has been operating in the background, together with the recent air attacks in Syria as a reprisal for alleged use of chemical weapons by Assad. Against all of this uncertainty, gold has only just managed in the last 3 months to vacillate within $60 an ounce. As we stand today, many of these tensions have waned, and an improving economic picture with lower US unemployment, higher GDP growth, and a relaxation of tensions will only serve to reduce the fear factor premium normally seen in gold prices during periods of tension and uncertainty. Secondly, generally, precious metal prices rise in the first few months of the year, only to fall back again towards June, July, and August, and we are shortly about to enter that period. Thirdly, published on the 3rd of May 2018, only 3 days ago, the World Gold Council announced that gold demand for the first quarter of this year of 973.5 tons was the lowest quarter one since 2008. The main cause was a fall in investment demand for gold bars and gold-backed ETFs, partly due to range-bound gold prices. Jewellery demand was steady at 487.7 tons, as growth in China and the US compensated for weaker Indian demand. Central banks bought 116.5 tons of gold, up 42% year on year. Technology demand extended its recent upward trend, growing 4% year on year to 82.1 tons. The total supply of gold increased by 3%, primarily due to modest increase in producer hedging. And mine production was fractionally higher at 770 tons. Hardly an environment to get too excited about, with the expectation of imminent rising prices. It's simply unlikely to happen with these figures persisting. Fourthly, the Fed is expected to raise interest rates in June and possibly twice more later in the year. We are already witnessing a strengthening of the US dollar, both of which are likely to cause precious metal prices, and especially gold, to fall further. And fifthly, the most recent gold COT report, Commitment of Traders report, published Friday, show that COT futures short contracts outweigh longs by 480,000 compared to 455,000. And combined futures and options show again shorts dominating, with 684,000 contracts versus 657,000. Now, whilst these are not definitive, they do show quite a good indication of trends, and the previous week's report shows a similar pattern. Therefore, professional investors are expecting lower prices. Now, you do not have to just take our word for it. Philip Streibel, senior market strategist at RJO Futures, said on Kitco News on Friday the 4th of May, quote, "In June, the Fed should raise rates again. That'll probably be another catalyst to put the pressure on. I think for longer-term traders, if you look at the ADX, which measure the strength of the downward trend, it's at 40, which is a considerably strong downward trending market," unquote. He also added, quote, "The dollar index has been really weighing on gold, and the dollar broke out from a small consolidation range, and it looks like we can target some of those previous highs of 95 on the dollar. The last time it was at that level was last November, and gold prices were down at $1,275. So if the dollar continues to rally, I think that's what's going to weigh in on gold. Frank Holmes, CEO US Global Investors, also told Kitco News that gold is unlikely to see any upward movement until the second half of the year. Quote, "The US dollar just looks more attractive. The issue is going to come in the second half of the year when we start dealing with higher interest charges and this money supply being still so great." Unquote. Interestingly, the LBMA, the London Bullion Market Association, a standard-setting body for the industry, says the 34 analysts polled are divided on the paths that precious metal prices will take in 2018. We quote them. Opinions differ as to the level of US real interest rates, the likely impact of geopolitical factors, and the pace of global economic growth. Our contributors are divided as to what will have the greater impact, and hence we have received forecasts for gold as high as $1,510 and as low as $1,120. And it's a similar story for the other metals. Unquote. Last year's winner, Bart Melek of TD Securities, who came within $1 of the 2017's average gold price of $1,257, forecasts a high for gold of $1,433 and a dip to just below $1,200 and an average for the year of $1,313, close to its current level. The winner of the 2015 competition, Bernard Dada of French investment bank Natixis, is a notable bear and predicts gold to fall as low as $1,120 and an average $90 an ounce below current prices. Robin Barr of Societe Generale is the most pessimistic about bullion's average value in 2018 being $1,215. Ross Norman of Sharps Pixley, London's top bullion broker, forecasts a tight range for gold: $1,260 on the downside, a $1,400 high, and a $1,358 average. Norman has been the most accurate forecaster in recent years, coming in as the outright winner 5 times and a runner-up 4 times. So there we have it. Not one serious forecaster is predicting gold above $1,510 or below $1,120. Considerably less than the $3,000 or $5,000 an ounce we often see on the fake news pumper channels. Our view is that gold will fall into $1,200 territory very soon, and almost certainly before the end of June. Unless, of course, some erroneous black swan should happen to swim into our channel. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, subscribe as a free member for regular email updates and offers.
Our Facebook page, which is updated regularly, can be found at facebook.com/Illuminati Silver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.